Hey, welcome to the channel. So last week, Chevron announced record earnings for the year, and also they announced a record-breaking $75 billion stock buyback program. And the Biden administration wasted no time in calling out Chevron and the other oil and gas companies as profit mongers and benefiting from rising oil and gas prices while they're hurting the consumers at the pump.
Chevron plans a massive $75 billion buyback. That is triple the size of its previous authorization that was unveiled back in 2019. The company is also hiking its dividend. Brian Sullivan is here with the details. That stock right now up by about 2.8%. This is a really big move, Brian.
So at the end of last week, Chevron reported record profits in 2022. And they also announced a massive $75 billion share buyback program. And in addition, they raised the dividend. So Chevron reported a 60% increase in earnings, $4.09 a share. Revenues grew 17% to $56.47 billion. The full year earnings in 2022 ballooned up to 28% to $18.86 a share, while sales increased 51% to $246 billion. Cash flow from operations in 2022 totaled $49.6 billion compared with $29.2 in 2021. Meanwhile, capital spending in 2022 was $12.3 billion, up from $8.6 billion in 2021. Over the last 3 years, Chevron averaged a 200% increase in earnings compared to the previous year. And this has just been an absolutely incredible year for Chevron and most of the other companies within the oil and gas sector. But this news wasn't good news to everybody, because we all know how Joe Biden feels about stock buybacks in the oil and gas sector.
As I'm calling on oil companies to pass the savings on to consumers. Consider this. In the second quarter of this year, profits at 6 of the largest producing publicly traded oil companies were more than $70 billion. That's $70 billion in just one quarter, 90 days, $70 billion. So far, American oil companies are using that windfall, the windfall of profits, to buy back their own stock, passing that money on to their shareholders, not to consumers. In fact, in the first half of the year, those same companies spent $20 billion buying back their own stock, and most importantly, buying back the most significant buyback in the last almost a decade. That's great if you own a lot of stock in an oil company, or if you're an executive in an oil company. Puts a lot of money in your pocket. That is how you get paid. But it's not the case for the vast majority of Americans paying at the pump.
Okay, so on this channel we've talked a lot about the oil and gas sector. I historically recommended Exxon and Chevron in March of 2020 during the pandemic when Exxon was selling for $33 a share. We've had an incredible increase in both stocks and in the sector in general. It's been the best sector for 2 years in a row, and we're very happy about that. But I gotta say that, you know, the Biden administration cannot have it both ways, okay? They cannot start out in the beginning of the presidency declaring a war on fossil fuels and, you know, shutting down pipelines, doing everything they possibly can to prevent oil and gas companies from getting permits and licenses and pulling back on everything. It's very clear that their intent is to destroy the oil and gas business and bring in green energy. Now, during his tenure as president, gas prices, even though they've come down recently, now they're going back up They're about 50% higher than when he took office. Heating oil, for example, is up 68%, and diesel is still at very high levels. Ever since Biden has come in, the oil and gas companies have been faced with a situation where the U.S. government has been basically against their business, okay? And add to that the ESG situation. It has made the prospect of investing in very capital-intensive, very long lead time oil and gas exploration projects. It's made the prospect of that very unattractive from a risk-reward perspective. And because of that, oil and gas companies have been reluctant to make these huge capital investments to invest in more exploration. It just makes sense, right? And as a result of that, and some other geopolitical situations, which obviously we had no control over, like the war in Ukraine, the overall supply-demand situation, both in the United States and internationally, has been out of balance. And it's kept oil and gas prices relatively high. Now, gas, of course, has come down recently because Europe has experienced a warm winter so far, but that gas price is very volatile, and I'm sure it'll go up again. Oil right now is around 82, and so you can't have it both ways. You can't say you hate an industry and do everything you possibly can with your policies to thwart that industry and then not take responsibility for the prices of those commodities going up. Since Biden came in, the oil executives like Mike Wirth, the CEO of Chevron, have dealt with an extremely antagonistic administration in the Joe Biden administration. And it's really funny when people are interviewing Mike, for example, and they ask him pointed questions about the administration. Watch how political he is. And, you know, you can tell he's a little bit frustrated dealing with these people in the administration, but he very artfully dodges the question.
So the question, and I guess you may pun on this too. When you hear the president say, we are going to end drilling 10 days ago, after he's saying, we want you to increase production. If you hear the president say we're going to end drilling, do you just take that as, I don't know, as just sort of politicking and you don't really believe it? Or do you say, I'm not going to invest any money, because why would I do that if 5 years from now we end drilling?
Well, we hear people say a lot of things. So
you discount.
You watch what they do,
Okay.
And we invest through cycles. And we've received mixed messages, Joe. You've got that right.
Okay.
And, mixed messages don't increase confidence.
Will Chevron be drilling in 2050?
Yes.
Mama didn't raise no fool. You don't get to be CEO of Chevron without knowing how to dodge questions and be political, which he basically is. Okay, so where does this leave us as investors with all of this nonsense going on with ESG and with the Biden administration? They're not changing, okay? And as an investor, as we are on this channel, in the likes of Chevron and Exxon, because we believe in the supply-demand imbalance and because we believe that oil and gas is not going away anytime soon, what does it mean to us that companies like Exxon and Chevron are able to make such large stock buyback programs with this just enormous amount of cash that they're spewing out? Well, I am still bullish on the oil and gas business for all the reasons I've stated in the past. I think the geopolitical situation with Ukraine, the boycott of Russian oil and gas, the domestic political situation, which we talked about in this video, as well as the reopening of China, all of these reasons are why I still like the sector. I am not selling my Exxon or Chevron. My largest position by far is in Exxon. I recently came out with a video on CVR Energy, which I will put at the end, and I would like you to take a look at that. I go into tremendous detail on my investment thesis on that company, which I am very bullish on. And so I think all in all, I would stay the course if you have enormous profits, you might want to sell some, take some chips off the table. But I think this thing has got further to go, and so I would stay invested. And as far as the market goes, of course, we are keeping a healthy balance of cash because I think we're still in a bear market. Well, thank you for watching. If you got value out of this, please like and subscribe. And also think about giving a super thanks. The super thanks is where you make a contribution to the channel. No contribution is too small, and the proceeds all go to improving the content on this channel so that you can benefit in your investing future. Thanks again for watching, and I'll see you on the next video.